You want to know the truth about trading? Then listen carefully. The market doesn't care about you, me, or anyone else. But that's not because it's cruel. It's because the market is neutral. It reflects pure opportunity, not fairness, not sympathy. It's not personal. The market is an endless stream of possibilities, and how you experience it depends entirely on you. If you step in without structure, without consistency, you'll confuse randomness for meaning, and that confusion will cost you everything. Not a little, not some, everything. Do you think I'm exaggerating? Then you haven't seen a trader destroy themselves because they believed they could control what cannot be controlled. I've done it myself, more than once. And every time, the truth comes back to the same foundation, beliefs and rules. My rules, not for controlling the market, but for controlling myself. Because trading isn't about predicting. It isn't about luck. It isn't about a hot tip or a whisper. It's about managing your own mind in an environment of uncertainty. If you can't maintain discipline, the market will reflect that chaos right back at you. Try trading with emotion, and the market will expose your weaknesses faster than you can react. You want to trade like a professional? Then you must think like one. And a professional trader understands this. You don't trade on hope, on fear, or on ego. You trade based on probabilities, and probabilities only mean something when you have rules. Rules are your anchor in the storm of uncertainty. They aren't emotional. They aren't flexible. You follow them even when it hurts, especially when it hurts. Because your rules aren't for when things are easy, when every position is green. They exist for when uncertainty presses against you, when you're tempted to believe that just this once you'll be different. That's when your rules define who you are. Have you ever held a losing trade, thinking it would come back if you just waited? Did it? Or did it drag your emotional capital and self-trust down with it? That's the cost of not accepting uncertainty. The market didn't do that to you. Your refusal to accept loss did. I learned that lesson early. The weakness is never in the market. It's in the trader's inability to accept what is. A stock, a chart, a price. None of these care about you. They just are. They move according to countless variables you can't control. When you hold a loser, you're not fighting the market. You're fighting your own need to be right. The only way to win in this game is to surrender the illusion of control and embrace the truth. Trading is about probabilities, not certainties. Cut the loss, move on, preserve your confidence, because your mindset is your real capital. Think you're smarter than the market? Then you've already lost. There's no shame in taking a small, disciplined loss. It's a necessary part of the edge. But there's deep pain in refusing to take one and watching it grow. Rules keep your losses small. Rules protect your mental clarity. Rules are what allow you to stay objective, the most important skill of all. And yet so many traders ignore this. They think discipline is optional. They think they can outsmart randomness. Tell me, have you ever bent your own rule and regretted it? Every consistent trader has. And if one hasn't, they haven't traded long enough. Now let's talk about patience. Patience isn't passive. It's active discipline. It's not just a virtue. It's part of your edge. Trading isn't about constant action. It's about waiting for alignment between your beliefs, your strategy, and the market's behavior. Most traders lose because they crave stimulation more than they crave consistency. The market knows this. It tempts you with movement, not opportunity. Have you noticed how the market seems to invite you into trades that don't fit your plan? That's not the market's fault. That's your brain searching for emotional comfort in uncertainty. Patience is hard because it demands you trust your process more than your impulses. The market doesn't pay you for activity. It rewards alignment between your plan and the market's flow. Ask yourself, do you have the patience to wait for that alignment? Or will you react to every tick as if it means something? My biggest gains came not from trading often, but from waiting until my beliefs, my analysis, and the probabilities aligned perfectly. And another truth, never add to a losing position, ever. Averaging down isn't discipline, it's denial. Why would you increase risk on a trade that's already invalidated your premise? Because you can't emotionally accept being wrong. That's not trading. That's ego management gone wrong. The market doesn't punish you. Your refusal to accept uncertainty does. I've seen countless traders blow up because they tried to prove the market wrong instead of admitting they were. Don't be one of them. Rules don't make trading easy. They make it possible. You'll still take losses. You'll still have drawdowns. But with structure, you'll stay psychologically intact. Without rules, you're done before you begin. Do you want to be a trader or a gambler? A gambler expects the market to fulfill their needs. A trader expects the market to do anything and prepares for it. Gamblers seek to be right. Traders seek to follow their plan. The difference isn't in intelligence, it's in mindset. The rule of trend? The market is never wrong. Only our interpretation of it is. The trend is simply the collective belief of everyone participating. You can fight it if you want. But that's just your ego trying to impose certainty where none exists. Professionals don't fight trends. They align with them until the evidence changes. The courage to exit when the tide turns is the courage to accept being wrong. Rules demand honesty, the kind most traders can't handle. They prefer comfort over truth. They'd rather blame manipulation than admit they broke their own process. But the truth remains. It's never the market that destroys traders. It's their own inability to stay objective under uncertainty. I remember when I thought I had it all figured out. Made money fast, felt invincible. Then I broke my own rules. I fought the market. I tried to control randomness. I lost everything. Not because the market was cruel, but because I refused to accept its nature. The lesson was carved deep. Structure is freedom. Rules protect your state of mind. Never let a winning trade turn into a loser, not because the market owes you, it doesn't, but because your goal is consistency, not euphoria. The market gives opportunities, not guarantees. Take the win. Protect your equity, both financial and emotional. Greed is just fear in disguise. Fear of missing out. Fear of not having enough. It's the opposite of trust in your system. Have rules to exit profitably, just as you do for cutting losses. Without them, you'll always be reacting, never creating. Rules aren't emotional. They don't care if you're tired, confident, or scared. They are the framework that allows you to trade from a probabilistic mindset. Break them, and the feedback will be immediate and painful. Not because the market punishes you, but because you violated the mental balance required to perform. Trading isn't just about capital. It's about psychological capital. Lose that, and you lose everything. The greatest danger in breaking your rules isn't the financial loss. It's the erosion of self-trust. Once you lose that, you're no longer trading probabilities. You're trading emotions. Rules are your foundation. Without them, you drown in randomness. You think money will save you? It won't. I've seen traders with massive accounts fall apart because they never built the inner discipline that money can't buy. Capital magnifies your weaknesses as much as your strengths. You can't buy consistency. You can only build it through belief, structure, and rules. These aren't cages, they're freedom. Each rule is a reinforcement of trust in yourself. Cut losses quickly. Never add to losers. Trade with probabilities. Manage risk small. Every rule is a pillar that keeps your psychology stable. Break one, and cracks appear. Break several, and your entire framework collapses. The market is infinite. You are finite. Without rules, you'll be swallowed by that infinity. Don't test it. They looked at their millions like armor, convinced that capital alone made them safe. But in trading, money doesn't protect you. Mindset does. The market doesn't punish size, it exposes weakness. A few trades taken without discipline, a series of emotional decisions, a refusal to accept loss, that's all it takes. The market doesn't attack your money. It reflects your inability to manage yourself. The more capital you have without structure, the faster it magnifies your flaws. Without rules, your size isn't protection. It's a mirror showing how unprepared you really are. Do you think probabilities care about how much is in your account? Whether it's 10,000 or 10 million, the randomness of outcomes remains the same. The market doesn't pull harder because of your size. It simply reflects your behavior. Rules are what level the field. They're not about wealth. They're about consistency. A trader with small capital and strong discipline will outlast the wealthy trader who lacks emotional control. That's not philosophy. That's reality. I saw it many times early in my career. Traders with small accounts, trading cautiously, staying within their comfort zone, following their process. They lasted. The big players, overconfident, ignoring risk, assuming their wealth made them invincible, they disappeared. The market doesn't care how big your stake is. It only responds to how well you manage uncertainty. In the end, survival isn't about power. It's about process. Rules don't bend to your feelings. They don't care if you're confident or afraid. They exist to keep you stable when your mind starts to drift. Yet most traders treat rules like optional guidelines, something to respect when it's easy, to abandon when it's hard. Then the storm hits, volatility spikes, losses mount, and fear takes the wheel. That's when undisciplined traders double down, hold losers, and tell themselves it'll come back. But the market doesn't bend to hope. It reflects your internal conflict. Be honest with yourself. How many times have you known the right thing to do, but did the opposite? That's the real battle. Discipline isn't about knowing the rules. It's about following them when your emotions scream against them. Capital without discipline is like a ship without navigation. You might move, even make progress, but you're not in control. You might make money, but you won't keep it. The market always reclaims what was earned without structure. Making money is the easy part. Keeping it, that's mastery. Rules are what let you keep it. Without them, your gains are temporary, fragile, like a sandcastle before the tide. The market gives, then tests whether you're prepared to keep what it gave. Fail that test, and it takes back twice as much. I remember a trader once, rich, loud, convinced that size equaled skill. He mocked rules, called them a crutch for the fearful. He believed capital made him immune to risk. But the market doesn't reward ego. It tests every belief you hold about yourself. One shift in conditions, one series of impulsive trades, and his illusion collapsed. In a month, his fortune was gone. Not because he lacked money, but because he lacked structure. Capital amplifies who you are. Without rules, it amplifies your self-destruction. Rules may seem small. They look simple. Cut your losses, let winners run, never add to losers. Too simple for clever minds that crave complexity. But simplicity is power. The market rewards clarity, not cleverness. These rules aren't constraints. They're freedom from chaos. Ignore them, and you drown in your own impulses. Every time you follow a rule, you reinforce your belief in consistency. Every time you break one, you weaken your foundation. And here's the cruel part. The damage doesn't show right away. You break one rule, and nothing happens. You break another, and still you're afloat. You think maybe you've outsmarted discipline. But that's the illusion. Your confidence grows while your structure erodes. Then one day, randomness aligns against you, and everything collapses at once. That's how traders implode. Not in one blow, but in a series of small rationalizations. Have you ever felt that slow erosion? That subtle loss of control when you realize it's too late to fix what's already broken? The loss isn't financial. It's psychological. When you violate your rules, you don't just lose money, you lose trust in yourself. You start hesitating, second-guessing, reacting to fear instead of following your plan. That hesitation kills performance faster than any bad trade. Rules aren't just financial protection. They protect your mental edge. Because in this game, your belief in yourself is your edge. When that belief collapses, your system collapses. Rules remind you that even when you lose, you did it correctly, within the boundaries of your edge. That's how you maintain consistency. Without rules, every loss feels random, every decision uncertain, every emotion amplified. That's when traders quit, not because of lack of capital, but because they lost their inner stability. Capital gives courage. Rules give survival. The market doesn't distinguish between big and small accounts. It distinguishes between structured and unstructured minds. The sea of uncertainty rises for everyone. The question is whether you built your mental lifeboat before it did. Because the waves always rise, they don't warn you, they don't care who you are. Capital makes you confident. Rules make you prepared. When the volatility hits, confidence collapses. Preparation endures. Which do you think matters when uncertainty explodes? Rules are your lifeboat. You don't appreciate them when the market's calm. You barely notice them when everything's going right. But the day comes when volatility roars and the tide turns fast. And then you realize those simple rules were your only defense against chaos. If they're not nailed down, the market will take everything. Your money, your confidence, your composure. And it won't hesitate. Patience isn't optional. It's a core component of a probabilistic mindset. Most traders think patience means waiting idly. But real patience is active awareness. It's knowing that no trade is better than a low-quality one. It's emotional control under the illusion of opportunity. How many times have you entered a trade just because you were tired of waiting? The market seduces you that way. It knows your weaknesses. It offers almost good setups, half alignments that tempt you to break your rules. That's how most traders lose, not from bad analysis, but from impatience. They mistake movement for opportunity. Do you believe the market rewards activity? It doesn't. It rewards consistency, and patience is consistency expressed over time. Patience prevents you from trading noise. The market is in constant motion. Every tick invites you to act, but most of those moves are meaningless. Without patience, you'll chase every flicker until your focus and capital are exhausted. With patience, you wait for alignment, the moment when your edge, your beliefs, and the market synchronize. That's when probability is in your favor. That's when trading becomes effortless. Gamblers can't wait. Traders must. Which one are you? I remember watching the tape for days, even weeks, without placing a trade. My peers thought I'd lost my nerve. They mocked me for waiting. But I wasn't waiting idly. I was waiting for alignment. When it came, one trade changed everything. That single moment, born from patience, outperformed months of frantic activity. That's the paradox of trading. Stillness creates profit. Waiting creates opportunity. Patience isn't a suggestion. It's a rule. The hardest rule of all, because it fights human nature. When you see others trading, making gains, it's easy to doubt yourself. You think maybe you're missing out. Maybe your discipline is costing you. But in truth, your patience is protecting you from randomness, from emotional drift, from yourself. Maybe you should take just one trade for the thrill of it. That's the voice of impatience, the ego disguising fear as opportunity. It whispers that doing something feels better than doing nothing. But what you don't see is how quickly those same impulses drain your consistency. The traders chasing action lose not because their systems fail, but because they trade for emotional relief. They crave movement instead of waiting for alignment. Their fast profits vanish in the very next trade. They're too distracted by the need to act to notice the true cost, the erosion of patience, the collapse of discipline. Patience, on the other hand, keeps you in control. It's not about passivity. It's about conserving emotional and financial capital until a true high-probability setup emerges. Have you ever felt that burning need to jump in simply because everyone else is doing it? That's your inner dialogue testing you. Most traders fail that test because they haven't learned to trust that opportunities are infinite. Patience protects you from yourself. Fear and greed both demand immediate action. Fear tells you to get out too soon. Greed tells you to get in too fast. Patience is the neutral state between the two. It's emotional equilibrium. It says wait. Wait for confirmation. Wait until your edge is present. Wait until the probabilities align. And if you can't wait, if you act from emotion, you've already surrendered your edge. The punishment might not come right away. It might delay for days, even weeks, but the cost will always arrive. Do you have the strength to wait when every nerve in your body screams to move? That strength is patience, the core of psychological discipline. But patience doesn't mean avoiding action forever. It means choosing the right action at the right time. The patient trader isn't passive or timid. He's strategic, like a hunter who waits for alignment instead of chasing every shadow. The impulsive trader exhausts himself running after noise. The patient trader waits for clarity, then strikes decisively. Which mindset do you think the market rewards? The reactive or the deliberate? I remember times when volatility was wild, when everyone around me was trading in a frenzy. They called me stubborn for sitting out. But when the dust settled, their accounts were shattered. I was still centered, still calm, still ready. When the real opportunity appeared, I took it, and they were too broken to follow. Patience may not look exciting, but it's what survival is built on. And survival is the foundation of long-term success. Patience is also the antidote to overtrading, the disease of emotional attachment to activity. Many traders believe more trades mean more money, but in reality, more trades mean more exposure to randomness. The market doesn't reward quantity. It rewards timing. 10 impulsive trades can't match the profit potential of one well-timed, rule-based trade. Yet people can't stop themselves. They crave stimulation. The market becomes their emotional fix, not their field of discipline. Do you see why patience must be a rule, not a preference? Without it, you'll overdose on action and burn out mentally and financially. Capital and patience are inseparable. Capital gives you time. Patience allows you to use that time wisely. Without patience, capital leaks away silently. Small losses here, premature trades there, until one day it's gone. With patience, every dollar works only when the odds justify it. That's how consistent traders grow, not through constant motion, but through selective precision. Do you have the patience to wait until conditions align? Or are you like most, spending energy on scraps and missing the real feast? Patience isn't natural, it's trained. Human nature resists uncertainty. We want resolution now, gratification now. That's why patience must become an internalized rule, something you obey regardless of emotion. Because the market punishes instinct and rewards awareness. Your instincts scream, "Act now." Your discipline whispers, "Wait." Which voice do you trust? There are days, even weeks, when the best trade is no trade at all. And that's the hardest truth to accept. Doing nothing feels like failure. But in reality, no trade can be victory, because it means you protected your capital, your focus, and your state of mind. You preserved the most important resource of all, clarity. Think back. How much have you lost? Not from bad analysis, but from entering when you should have stayed out. Patience isn't optional, it's survival. You can have the sharpest system, the most refined strategy, and the largest account. But if you can't wait, if you can't obey the rule of patience, none of it matters. The market will strip away your illusion of control and expose your impatience for what it is: emotional weakness. Now let's talk about the rule that has destroyed more traders than any other: fighting the trend. The trend is your ally until it ends. Never oppose it out of ego. That single principle could save years of pain, yet few internalize it. Everyone believes they can outthink the collective crowd. They see an extended rally and declare it too high, so they short. Or they see a sharp decline and insist it's too cheap, so they buy. But the market doesn't care what you think it should do. It does what it is doing. Have you ever tried to call a top or bottom? And how did that end? The trend reflects the current balance of collective belief, the only truth that matters. News, opinions, and commentary distort perception. But price tells the real story. When price is rising, it's because demand exceeds supply. When price is falling, supply exceeds demand. It's that simple. But simplicity offends the ego because it leaves no space for cleverness. The mind craves complexity, and in that craving, it loses alignment with reality. Fighting the trend isn't analysis, it's vanity. It's your ego's refusal to surrender control. The market doesn't care about your opinion of value. It reflects collective perception, not individual conviction. Traders destroy themselves every day trying to impose their beliefs onto price instead of aligning with what price is communicating. I learned that lesson painfully. Early on, I wanted to prove I could outsmart the masses. I shorted strength and bought weakness, convinced my contrarian thinking made me superior. And sometimes it worked, just long enough to convince me I was right. But most of the time, the market crushed me. Every tick against me was the market's way of saying, "You're fighting the flow." Only when I surrendered to the idea that the market is always right did I start to make consistent money. The trend became my guide, not my opponent. Without it, I was lost. With it, I had direction. Have you ever realized too late that the crowd was right and you were wrong? That's the moment you understand. The market isn't something to conquer. It's something to align with. A trend is like a tide. Resist it, and you'll exhaust yourself. Move with it, and it carries you effortlessly. That's why the rule exists. never fight the trend. Ego tells you you're smarter. Ego says you see what others don't. But the market is larger than your ego. It will drag you under while you're still arguing with it. The tide doesn't care about your logic. It moves by its own rhythm. Some traders glorify calling tops and bottoms. They boast when they're right once, as if that one moment of luck defines their skill. But ask them where those profits are 6 months later. Gone. Because calling reversals isn't sustainable. It's a game of low odds and high risk. Following the trend, on the other hand, is a game of alignment. Clear, simple, repeatable. But most traders would rather be clever than consistent. They'd rather be right than rich. Which one do you want to be? Another truth about trends. They persist longer than logic allows. Bull runs extend far beyond what seems rational. Bear trends sink deeper than feels possible. That's why ego-driven, contrarian trades are so destructive. They fight reality. The mind insists the move must be over. The market says otherwise. Many traders aren't ruined because the market reversed, but because it didn't. The ego craves control. It wants to feel powerful. But trading isn't about power, it's about flow. Profit comes from harmony with the market's movement, not resistance to it. The professional doesn't predict when the trend will end. He follows it until the evidence changes. The end reveals itself naturally through shifts in volume, failed breakouts, or structural reversals. If you anticipate too soon, you fight again. If you stay too long, greed takes over. Both stem from the same illusion, that you can control uncertainty. The discipline is in balance. Follow the trend until it ends. Not longer, not shorter. The market always gives signals. Your job is to see them objectively. Ego blinds you both ways, and it makes you short too early and hold too long. Ego says, I'll call the top. Ego says, I'll capture the last tick. Both end the same way, in losses. The trend doesn't deceive you. It's your perception that does. The market will always tell you the truth through price, if you're willing to listen instead of argue.